A representative from Stellar is going to help us out with regs in 2023, advising the CFTC. We also got the Stellar Development Foundation giving out another $10 million worth of lumens out there. How does that make you feel regarding the price of XLM, knowing that SDF is using those funds to make things happen? And we've got the bottom. Yes, it seems like the bottom is priced in as mergers and acquisitions seem to be on the way up, which is yet another indicator that the worst is behind us. Those stories and more coming up next. Bitcoin 21,762, ETH 1529, XRP 38.4, and XLM highlight of the show sitting at 8.6. All right, XLM is not above that 9-cent mark. Remember, February 14th, we want to be above 9 cent when the next CPI data comes out, right? We would rather be a floor that we move from rather than a resistance point we have to bust through. Ooh, knocked my head off when CPI data comes out. Ethereum, Bitcoin, the rest of the crypto market was sent reeling back, and this has to do with Kraken. Yep, SEC went after Kraken, $30 million fine, destroyed the staking arm of its business. But let's get into even more current news, and that's why you hit the subscribe button. I think we've passed the bottom. Bitcoin miner CleanSpark plans to continue pursuing acquisitions amid the bear market. We don't feel compelled to go out to have to do mergers and acquisitions, but obviously if we see a good deal, we'll take advantage of that. CFO Gary Vaynerchuk on his company's fiscal first quarter earnings conference call on Thursday. He also thinks that if Bitcoin's price doesn't get close to 40,000 heading into the next halving event, there will likely be a lot smaller miners, particularly private companies, that won't be able to access capital markets, yielding potential opportunities for CleanSpark. All right, these companies with mergers and acquisitions, essentially what they want to do is they want to get in as cheap as possible, but not on the way down, rather when it's on the way up, so they know they're not guaranteed any more losses, okay? The interesting part here is he's referring to smaller miners, right, of this Bitcoin economy. And again, whatever is good for Bitcoin is good for the rest of the market. We've seen that, right? It pulls up the rest of the market with it. But these small miners out here that can't make it, the big guys with cash are going to be able to buy them by their rigs, pennies to the dollar and so forth, and are going to be able to continue with a more profitable, sustainable business, right? Part of the issue we have right now with markets just going to a complete mess had to do with companies not being able to pay back their loans. And I want to focus on a specific statement in this article because it ties into what Jerome Powell and the Fed have been doing, and this is what we've been covering on this show. So for those of you that have been watching this for a while, you know what I'm about to bring up, particularly private companies that won't be able to access the capital markets, yielding potential opportunities for CleanSpark. Okay, essentially here, because the Fed is jacking up rates higher and higher and higher, these smaller mining companies, their loans, their business loans now are more expensive. Why? Because the rates are higher. So now as these smaller companies need more capital, right? Because, hey, this extended crypto winter, remember, a lot of these miners, their rigs won't make money until 30, 35, 40,000, all right? So if they can't make money, they're going to need some cash coming in. Until then, loans are an option. But now with your rates up 300, 400, 500 basis points more than what they were, let's say, a year ago, hey, it's way more expensive, and there isn't as much cash out there available, right? There's not as much capital out there available for these companies to access. So Jerome Powell's effects, right, with CPI data, interest rate hikes, that is something that not only hits us right now with price action, but it also affects investment down the road. That's why CleanSpark is out there going, hey, we've got cash to do mergers and acquisitions. We think the bottom has already hit us. Let the markets be rough for a little bit longer. We'll squeeze out these smaller players and get bigger along the way. Robinhood records 25% loss in crypto revenue for quarter four. Oh yeah, we've got those stats from Robinhood, and as always, any article you see in this video will be linked in the description below. I'm really itching to do a P&L deep dive. Let me know in the comments if that's something you'd be interested in. But yeah, Robinhood came out more losses. All right, and the reason I like using Robinhood as an example is because they are a pretty good broad spectrum thing of the crypto market, right? They're losing money on volume going down. There's not as many people doing loans and so forth. Got all their deets right here for you to check out, but I don't want to get bogged down with that because I want to get into the stellar news. Wish I had seen this before. Kraken CEO Jerome Powell after $30 million settlement. All right, so we just learned that Kraken taxed, right? Got taxed by the SEC for $30 million. That's why the markets are red, okay? But the big story behind this, The dude didn't even know it was coming. The SEC didn't even give him a heads up. Rather than playing nice in the sandbox and being like, hey, there is a product that your company has that we're kind of worried about, with securities violations and so forth. Do you want to talk to us about it? No. Instead of being nice and playing nice in the sandbox like that, Gary Gensler and the SEC are just like, $30 million fine, you're done with this program. Over with. Unless you want to offer it to accredited investors using exemption rule 506. See, the SEC is not playing nice in the sandbox. Stellar Blockchain joins JP Morgan, BlackRock, and CFTC's Global Advisory Committee. The developer behind cryptocurrency XLM Stellar Development Foundation has been admitted into the CFTC Global Market Advisory Committee, joining traditional institutions like JP Morgan, BlackRock, and Goldman Sachs. This all has to do with stablecoin regulation. Gary Gensler and the SEC doing whatever the heck they want, casting a wider net and umbrella in regards to securities. CFTC has been fairly quiet on this stuff. They've been going after a lot of Bitcoin action, but now you've got Stellar out there working with the CFTC saying, hey, what can we do to start getting some regs in regarding stablecoins so institutional money, there can be some protections there, and encourage more investments into the crypto and Web3 space through the mechanisms of stable coins. Now, that being said, what else do we got? XLM Stellar giving out millions of dollars of developers. Here's why. Soroban is currently in testing, we're talking smart contracts, and expected to launch the first half of 2023. Earlier, $100 million adoption fund was also established to support its development. Remember, all of these funds come from the XLM, right? The Lumens pool that Stellar Development Foundation has. And that was my point in the intro. How do you feel about Stellar now giving out even more money? They already put $100 million, right? They dumped $100 million worth of Lumens onto the market to make it happen. They're now giving out another $10 million in order to get more funding for this. Now, and again, all right, hey, I understand we got to do smart contracts and so forth, but are they using the funds the best way that they could, right? Because think the more funds that they add to the market, right, you get what I'm saying about numerators and denominators. So let's get into that then, actually. Do you want to know how many lumens are circulating in the market and how many lumens Stellar Development Foundation is dumping out of the market? Right now, you've got 26,367 million in circulation. If you click on the XLM mark right here, it'll take you to this screen. This blue chart right here, these blue lines, this shows you XLM in circulation that's being added by SDF. So 100 million to start off Soroban. Now we've got another $10 million kicked in the funding there. It's a lot of action going into the market, right? Lumens being dumped in the market. And in fact, let's do this. Let's go to the 6 month. You could see in the last 6 months, circulating supply has gone from 25,300 million to now 26,367 million. So they've increased 1,067 million lumens into the market over the last 6 months. So there's definitely a lot of lumens flowing out from SDF to help these projects. How do you feel about it? How do you feel about the circulating supply going up? Do you feel like it's going up and you're getting the right results for that? Do you believe that the yield is where you would like it to be? And I'm not talking about the Gary Gensler yield where they're like, yo, that's an unregistered security. I'm saying for the amount of money that's going into these projects, do you believe that the results are justifying the amount spent, or do you believe that they are over or underperforming according to the money that's being spent? Because remember, these are lumens that go into the circulating supply. Again, that affects the denominator of the equation in circulating supply, right? All of a sudden, if we had 1 trillion lumens, they'd be worth way less, wouldn't they, everyone? So we have to kind of keep that metric and mechanism in mind. Is SDF using lumens correctly in the support of these projects like Stellar's Soroban? 2023 is definitely going to be a big year for the Stellar chain, hooking up with the CFTC and launching smart contracts. Now, yes, we did talk about the whole idea of adding lumens to circulating supply. I am very curious to know what you think about that. So please light up those comments down below on how you feel about Stellar dumping lumens in the marketplace to make stuff like this happen. Gary Gensler in the SEC casting an even wider net, not even talking with companies before going after them. If you want to stifle innovation and if you want to stifle an industry, right, and you want to push development overseas, which, hey, half the viewers out there are like, yo, SEC, keep screwing up, push these companies over into our countries. But like for me, for living in the United States, I'm watching regulators push out a whole industry rather than working with people. That was one of the things Nexo said. Nexo was like, we couldn't even get them to work together with each other. States and federal is what they were referring to. California and the feds. With this here, with Kraken, Kraken's like, dude, they didn't even tell us. They just show up at our door, boom, here's a $30 million fine. This whole arm of business model right here, staking, that's done. You didn't do proper disclosures. Complete mess with the SEC. That's why I'm happy to see Stellar working with the CFTC on stablecoin regs in 2023. Now I got two things for you. What I do outside of crypto and a crypto Web3 video tailored just for you by the YouTube algorithms. Until more news breaks, I'm gonna hit a little bit of elliptical this morning. You cool cats though, have a great rest of your day.